Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Welcome back, dear listeners, friends, and followers of Fintech Daydreaming. Another fantastic episode. I am Paul Krogdahl, your host for this episode. And as always, I've got with me my fantastic friend and partner in Fintech, Ville Sointu. And we've got a fantastic guest yet again on the show to have some interesting discussions. But before we kick off, Ville, how's life?
Life is good. I think I have this real feeling that we're almost getting back to normal. I was even able to make a weekend trip to London, private one, not business yet, but maybe in the near future, we were able to get back to business travel, which I surprisingly miss quite a bit.
No, so do I. I never realized how much you could miss airport lounges and just feeling of, getting onto a flight to go somewhere different. I really do miss that. I agree 100%.
Yeah. There is the Slush conference, which is happening in December here in Helsinki. So that'll be my kind of first business conference in a while. So really looking forward to that one.
Oh, maybe we should try and see if they want Fintech Daydreaming to do a session at the conference. What do you think?
Or at least we're going to do a bootleg in maybe one of the booths somewhere.
We must. Yeah, but hey, talking about traveling, actually, our guest today, Chris, is traveling. He is down for the Money 2020 conference. Isn't that correct, Chris?
That is. This is my first business trip for 19 months, can you believe? So, as you said, trying to get back to some normality. Yeah. It's great to actually be in a sunny Amsterdam with the ability to meet some great partners and some ecosystem players to our business.
Yeah, fantastic. So, Chris, thank you for joining us on the show. I suppose what we should do is just kick off with introducing you. Chris Vick, you are Director of Global Alliances at Backbase. We'll get more into what Backbase is in a little while. 30 plus years of experience in the industry, which means that you've got even better insights into this industry than I have. And I would say probably Ville as well, but I'm not too sure. And the thing that I find most interesting, you've been doing almost, is it professional or close to professional downhill mountain biking?
Yeah, I've had a long time playing about with bikes, that's for sure. And encompassed a lot of injuries besides as well. So I'm fortunate to live in what is probably a mountain bike mecca in the Surrey Hills in the UK. So any opportunity to go out and not damage myself is well received.
What's the worst injury you've had? I have to ask, I'm sorry.
Punctured lung.
Oh, ouch.
Which has left me with a... actually, I did that kite surfing. But I'd done it 3 times before. So on the final time, they decided to stitch back what was left or staple it and then stick it to the wall of my chest. And I've left with a nice 10-inch scar there on my back, which my 4-year-old daughter thinks was a shark bite.
Oh, God. So Chris, for the rest of the world who maybe don't know you, do you want to just share with us who is Chris Vick? Where have you come from, and how did you end up having this fantastic role at Backbase?
Yeah, of course. So, firstly, thank you for inviting me onto the podcast. I've been a fan of it for some time, and I think having these kind of conversations helps open up the minds of people. So it's always good to talk. So for me, by education, I'm a mathematician, and by trade, I'm actually a software engineer. But I actually started my career as a software apprentice for the Ministry of Defence, working on such lovely things as Star Wars projects back in the 80s. But I slowly evolved to pre-sales and product design. But then, being as shallow as I am, I moved into sales because I realized there was money to be made. So I then have spent most of my career building out partnerships, sales teams, sales execution, and also aligning that to strong methodology based on the time that I spent in BMC, where I had the joy of being immersed in the world of MEDDIC, which we now bring into everything we do around ideation all the way through to pipeline generation. So I also spent some time at Terminos before coming into Backbase. But for me, the move to Backbase was more aligned to where I think the market's going, how we see that transformation in banking, and how we're moving more towards this customer centricity or customer experience way of thinking as we move to this platform world.
That's actually a fantastic place to start off, right? I think every single bank is looking at how they're being disrupted, being driven by customer expectations, heightened customer expectations, the desire by customers for instant gratification, being treated as an individual rather than part of a demographic, and wanting to be supported in their life journeys, whatever device, whatever channel, however they're interacting with the bank, which means banks have to change the way they operate, the way that they interact with their clients. So what's your view on this? Where do you think we are heading with these transitions?
So I think we're at an interesting crossroads, because we've seen this sort of neo-reality where banks are being sort of besieged by these digital challenges. And those digital challenges at their core are trying to add this amazing customer experience. And we're seeing that whilst banks think they're moving towards this way, it's almost been when they needed to, minimum necessary. And it still feels a little bit, let's call it robotic, a bit sort of dysfunctional. But I think the way that we're now seeing things moving is we're saying that continuous engagement, continuous experience is the new game that we're moving towards. So this is more about bringing that human touch back to banking rather than it being very mechanized, and to make sure that whenever you're engaged with a bank, the one consistent thing you get wherever you engage or whatever you're engaging for is that continuous and consistent experience.
Yeah, no, we had a guest quite recently who made a, can I say, prediction or an assumption that moving forwards, banks will probably almost remove lines of business, where particularly for certain clients that are clients across multiple lines of business of a bank, it will become more of a hybrid model where each line of business or each unit disappears as far as both the bank is concerned, but also the client. Are you seeing the same?
Yeah, for sure. And I think we'll talk a little bit about Backbase in a while, but if we think about lines of business, whether it be retail, corporate, SME, wealth, these are kind of these labels that have been defined between 10 and 20 years ago. Yet we still feel we have to be tagged by these labels, where ultimately we should be able to come in and come out, depending on what we're looking for at any time, and we receive the service or the product associated to that request at the time. It would be the same for me as saying, if I go into Harrods, I receive this consistent experience, whether I'm buying children's clothing, sporting goods, a new suit, food from the food hall. The one thing that is consistent is the experience. And each day I go in there, I may be looking for something completely different. So I agree, the lines of business, let's call it tagging, are definitely diluting, so that we can almost create these very personalized journeys, depending on where you are, what you're trying to do at that time, throughout the life cycle of your engagement with somebody who manages and produces financial assets or products.
Yeah, I like your Harrods analogy there. Actually, if we take that one step further, Harrods doesn't care whether you're a retail customer, an SME, or even a corporate customer. You're treated in the same way. You get the same service and you get the same offerings throughout Harrods, irrespective of what role you have as you come in.
Yeah, and I think that becomes even more visible, because in the last 18 months, our personal lives have been very platform orientated. I think in my household, it's Amazon or Disney Plus, which seems to get consumed by our kids. So therefore, why wouldn't we want to have a similar experience through, and I'm not going to use the word bank, through an organization who helps manage and provide financial assets and products?
Yeah, I mean, could we even stretch the analogy a little bit further, thinking that maybe today banks sell and produce products which are sold and then consumed in various different ways by their customers, almost like a supermarket or a grocery store, basically. You get the raw ingredients, you get them in fine packaging, and all of this is getting more and more developed all the time. But ultimately, maybe the customers, they actually want a restaurant, somebody who actually picks up those ingredients and makes the full experience available rather than individual ingredients. So maybe, yeah, that's another way of looking at this, these kind of layers. You do need both. You still need the supply chains to actually have these raw materials in place. But then maybe, just maybe, you need a really good chef to make the perfect experience out of those ingredients.
It's almost looking at the output versus outcome based business models, right?
Yeah, and I think you can split that even further. You're now looking at organizations who provide in terms of core elements of banking. You then have aggregators who will bring together some of those elements. You then have distributors who would deliver that capability to certain customer channels. And then you have experience. So you could do an element of all of those or some of those, which is this world we're moving to, where a platform provider may not be a bank, but they will get access to banking products which are delivered almost white labeled, and their focus is on developing and building the experience so that people come back and see value in it.
Yeah, no, we've had an awful lot of discussions around embedded finance and banking as a service capabilities on past episodes. But Ville, I mean, from your perspective, from a bank perspective, any additional views on this?
No, like you said, we've covered embedded banking a couple of times, and I think these themes are becoming stronger and stronger. Moving from this, we will give you a checking account, a savings account, and a house loan, to actually having a full outcome-based solution or an experience. Now, the interesting discussion today here is that who should be the ones who actually provide that experience? So are the banks going to be this kind of grocery stores of financial services where these experience creators come and pick up their things they need in order to create the meaningful full experience for certain customer groups? You will always have the people who want to cook at home, of course, and they can come to the bank perhaps and get those things. But I think the value add of these experience creators is a really interesting angle to this, and the whole embedded finance, almost like a thread that we've been having in this season in our podcast.
Yeah. So
yeah, the other piece that I see in this, and it's this is where we're maybe leading toward, is almost like this financial concierge, somebody who's acting on your behalf with pre-authorized or pre-engineered offerings which are aligned to the way that you're consuming your own financial assets. Let me give you an example. Let's say I am month 33 into a 36-month car lease. As a bank, I've seen those payments coming out continuously, and I know you've got a Audi A3, okay? However, over the last 36 months, I've also seen you started a account for what was called baby clothes. So when I come into the end of month 34, why wouldn't I proactively reach out to you and say, I know your lease is coming to the end in 3 months. I've taken the liberty to find out a cost for an Audi, a BMW, and a Mercedes. But because I know that your circumstances have changed with the addition of children to the family, why not look at how we can take you into a Audi A4 estate, a C-Class estate, or a 3 Series Tourer? And by the way, if you allow me to do that for you, because I've pre-authorized the spend, we will give you the insurance for free as a value add because you're a loyal customer to us. that's valuable.
Yes.
And I think that's the kind of the way we're going, where we're almost building this relationship, which says, I've got enough information about you, which you've kindly allowed me to see. Now I can make some smart recommendations and start building perceived value in what your bank can do for you.
And I think there's another element you're bringing in here, Chris, that I have been quite vocal about on LinkedIn, etc., and that's around financial literacy. I think there is a serious problem at the moment with people not having good enough understanding of money management, not being financially literate. And it doesn't just mean understanding what is money and counting 1 + 1. It's understanding how to look after your money, invest your money, making financially sound decisions. And I think there is still a high amount of trust in most countries between the banks and the clients, where the banks can take advantage of this to add an advisory capability on top of their products that benefits their clients.
Yeah, for sure. And I think, if we could all probably look at our own financial assets and think, do we do enough frequently to look at ISAs, savings, where you should shift money? Do I pay too much money for my mobile phone bill monthly and I should have switched it a month ago? There's so many things that could be done in the background to sweat the assets that I've got more effectively. And I think that is kind of where we need to go, because as you say, we've almost lost this generational gap of your dad teaching you about money. And now we've almost need to backfill it and find a way so that people get the most out of their money. Because interest levels, rates are so low, people don't seem to keep money in the bank. So let's find better ways of doing things with the assets that you do have. Yeah.
So what is Backbase doing in this space? It wouldn't be fair to have you come on this show without at least giving you some airtime to talk about Backbase.
Of course. So thank you for that. So interestingly, the conversation we've just been having is exactly how we kind of think about Backbase. Very, very much rather than this inside out approach that we have, which is define tools and process. It's more of this outside in. And how do we create a single engagement platform which will delight and engage customers throughout the entire life cycle? Okay, so whether it be from onboarding or to servicing or to upsell, how do we do that across all lines of business? And how do we do that with ability to provide things like targeted campaigns? So the idea we've built here is, how do we get back to empowering the employee to put that human touch I talked about back into assisting customers, whether it be in branch, online, or in real time? The other piece that we heavily play on is, how do we orchestrate value by integrating either the existing fintechs which you're engaged with, or even the fintechs you haven't engaged with yet, whilst we try and digitize operations so that we can build a continuous innovation stream which allows us to release new functionality really fast. So we've moved from thinking about separate lines of business to how at any point can I create this seamless journey, and at any point, if I need some human intervention, they're all looking at the same platform at the same time, whether you're an employee or a consumer of the bank.
So Backbase is a digital engagement platform rather than a core banking platform or a product.
Yeah, so we literally sit on top. So, and when I say sit on top, there's an interesting play here. Yeah. Yes, firstly, we are core agnostic. So we are an engagement banking platform which will sit on top of your core. Okay. We're also a engagement hub, which allows you to take headless capability from us, so you can start building on the platform yourself. So rather than looking at how do you take capability from us out of the box, which you can do, which a lot of people do, how can you then go and build capability on top of that engagement platform? So I said the on top piece, and I say that because we're moving towards a world where the engagement, the customer experience becomes the core product and everything sits around it. So, because if you think what we were talking about earlier, the one consistent thing we should be seeing is the customer experience or the customer engagement throughout the life cycle. It's the Harrods. How do you create the Harrods first? Then how do you create the capability to bring in different brands or fintechs who can leverage that Harrods experience?
Yeah.
And that's exactly what Backbase does.
And I'm sure you're going to tell me cloud native, cloud architecture, Kubernetes, and all of those fancy, cool buzzwords.
Exactly that. You'd expect nothing less. So yes, our Backbase as a service offering is a hosted offering, which also includes the application lifecycle management, the ongoing innovation services, the DevOps, because once you've suddenly built this ability to drive consistent communication, consistent engagement, you suddenly start thinking about art of the possible. You know, we talked earlier about why don't I make a recommendation of what your next lease should be? Why don't I look and tell you the lifetime cost of running that car? Why don't I give you free insurance? So we're going beyond banking now. We're talking about how do we build out perceived valuable communication and products to people. Therefore, the ALM and the OIS capability is saying, now let's build on the platform. We've got the consistency in the core, which is called now engagement rather than banking. Let's call it engagement, and build go-to-market propositions or build assets which leverage that repeatable capability in the middle. And even if we look at traditional lines of business, you know, we talked about maybe being labeled on things that we shouldn't necessarily be labeled on. Yes, we still have corporate wealth, SME as examples. But the beauty of using this platform is that you take the assets and they can be reused in any line of business. So you can create it once, see the value of it, and then move it through to a defined line of business or make up a new line of business.
Now, working for a bank, of course, I mean, these stories resonate quite a bit. So looking at this outside in and making sure everything is natively digital, we have this kind of common platform or common capabilities that which we can then orchestrate across the board. But in practice, I mean, what are the typical challenges you see when you work with banks and you come up with these ideas? So typically there's all sorts of things in the way that actually get in the way of achieving this. So what do you think are the most common ones that you've encountered in your work with banks so far?
Legacy perception of how banking should be run, lack of thinking about art of the possible, held back by existing investment in tools and process. And in fact, we still see a lot of banks, digital's kind of like this side bet. Yes. It's not core. They're not designing from a digital experience first. That should be the underlying play of everything we do. And that means there's a change needs to happen. And that's a big ask of any bank. So normally what we would find is let's find what would be a burning platform. We will prove the capability by using the technology to solve that burning platform. Then you get to see all of the ability to reuse those assets on other lines of businesses. And then suddenly people start thinking about, if I've now got a tire and a wheel, what could I use that for? Could it go on a car, a bus, a truck, a motorbike, a bicycle? So now they start seeing, how do I look at digitizing the actual bank's operations? And now I've got a view of how I can actually go out and innovate, which is what I need to do when I'm competing against all of these new players coming into the space.
We've talked repeatedly about this breaking down lines of business in banks, moving away from products towards client centricity, etc. I'm actually, you know, I sit on the outside as a consultant looking in. Ville, you sit on the inside, working with a bank, almost looking outwards, right? Do you think that most banks are going to go in this direction, or do you think banks are going to maintain the operating model they've got today? What's your feel on this?
You're asking me?
Yes.
Okay. I think banks are going through almost like a generational shift. right now. So if you go and talk to a bank, maybe 10 years ago, you would have seen the traditional banker giving these exact arguments we heard from Chris, basically saying that this is not the way banking is done and things like this. But today, you see new generation of people in many places having these conversations. And one way we can see that, looking at other banks, for example, is this launch of these new brands, these new satellite brands. And suddenly, when you go and meet these kind of digital brands or branches of these legacy banks, these are very different looking people meeting you in these instances. And I think this new generation of bankers who have been born digital, I mean, they are digital natives, to use this kind of very commonly used term, that also impacts the way these organizations are going to ultimately operate. These people are still not in the kind of upper layers of banks, but they are getting into meaningful positions. And I think this kind of mindset, the type of people working inside banks, that is what's ultimately going to kind of really break this into a new era of financial services. So getting the kind of old generation people to think differently is a tall ask. Some people get there for sure. I know a lot of seniors who are kind of really kind of in front of development, but unfortunately that's still a minority of people who are able to evolve from this legacy thinking, because they know that legacy works in their world. So I think this generational thing is going to kind of speed things up, and for sure this whole world of banking is going to change.
Do we think there are regional differences? Chris, do you, in the job you're doing, do you see differences across different regions?
Yeah, for sure. I think it's predominantly orientated around compliance and regulatory reasons. One of the things that we focus very, very much on in my role, at least as running the global alliances, that whilst we will build and we will build alliances globally, the execution has to be regional, because the fintech players, how you engage in that particular region varies considerably. And even down to the maturity of some of these organizations, some of these banks in region. You know, if we look at like Middle East and Africa, there's a huge number of brand new banks coming out, and they think digital first because they've never been a bank before. So they're thinking more about microservices, journey development, UX research, best practices, fintech integrations, and they've got that digital mindset. And even if they're not going to create product, then they could go back to a traditional bank and ask for a headless version, which then they become the aggregator and provide the experience on top. So it varies considerably. If I then look at like a tier 1 bank, tier 2 bank in Western Europe, at least, they've built their own solutions and have been for ages. I think one of our biggest competitors would be Build, where now we're saying, use the platform and build on the platform. You know, the AWS are there as an example to provide data center services in the same way Azure would be. You don't go and do that anymore. So why not do the same in banking? Bring an engagement platform in and build on top of that, based on the art of the possible and based on building services and products which are deemed valuable to the people who consume them.
Well, there's definitely a general trend in the industry of banks moving more towards buy versus build. I think that old notion of banks wanting to buy the IT companies with a banking license is starting to die away, right?
Yeah, for sure. And I think if we start looking at how we create journeys, microservices, if you think about all of those lines of businesses that we spoke about, 90% of them use the same underlying assets. So why not start building these small little components which can be reused whenever you need to? Because if you think the speed of building something to get it to market suddenly becomes super accelerated. Yeah. You're not building from scratch now. It's almost like the Lego brick scenario. You've got them all. You just need to place them slightly differently. And depending how you take those Lego bricks, one day it's a Millennium Falcon. The next day it's a Princess Castle. Do you know what I mean? So you have that ability to use that mindset to come up with hyper-personalized offerings in a real short period of time, which are the things that we expect when you're consuming service on the platform.
I love your analogies. This is going to be the episode of analogies. I can see that already. It's fantastic.
I already see a headline for this episode. Yeah.
Yeah, we have to change the title. But Chris, I'm actually thinking, back to you're a thought leader in the area of digital engagement, digital channels, and breaking down that whole, channel thinking for banks. Where do you see things moving when we start looking at emerging technologies like virtual reality, augmented reality, and those sort of things when it comes to engagement with banks, engagements with your financial life?
Yeah, it's an interesting one, because I think if I look at where we can use some of these, pervasive devices, for me, the whole IoT thing becomes quite interesting, and for a couple of things. One, as an example, if I'm actually in that Audi dealership that I was talking about, and it knows I'm there, why wouldn't it present to me a offer to refresh my lease on that car? Because it knows I'm in the dealership. Okay. In a similar way, that could be anywhere. So you could start providing highly timely, highly personalized offerings, depending where you are. But then at the other side, and I find this piece even more interesting, is IoT can become used as almost a financial transaction component. So, and it will allow us to create these very sort of smart or micro payments, depending on what we're doing. So if you're paying for electricity, if you're water consumption, if you're using office space, if you're renting a bike, it will charge you for what you're consuming at the time. And that can play a nice way into how you manage access to your assets, how it's aligned to how you consume your time. So if you are moving into a shared workspace, rather than having this contract up front, which defines you've got it for the next 90 days, when you're in there, it knows you're in there and it charges you for the time that you're in there for. So I can see more of these things being consumed within financial services. I think it's only held back by the art of the possible. And it's about getting people to think about, how can we be even smarter on how I use money, and how can it be more utilitized so that I'm only paying for it as and when I use it.
This is an area you've been spending a lot of time looking into as well, Ville, right?
Yeah, I mean, moving into real-time economy in the same way as everything is becoming connected, and we have sensors and devices, connected devices and data about us and of us all around us. So embedded finance, by definition, should be a part of these new data ecosystems. And that means microtransactions, machine-to-machine transactions, machine identity, basically making it possible for us to consume things as we use them and then stop paying for them when we don't, because we're able to measure everything in a very accurate and reliable way. Now and even more in the future. So yeah, I think this future IoT data ecosystem is going to be extremely exciting area of growth for banks in the future.
Do you think though, Ville, that virtual reality and augmented reality is going to change the way that we have digital engagements with the banks?
Virtual reality, I think, is a bit of a different thing. I mean, that takes you out of the context of where you are. So it's a way for you to virtually travel somewhere, whether that is a meeting or a workshop or just kind of going to see someplace. So that's a bit of a different thing. But I think augmented reality, specifically the rumors around Apple entering this space with their glasses, might be a big growth area as soon as the devices become actually usable. But once they do, once we start seeing things around us with digital overlays, so you could actually look at an object and see its features in the same way, we could, as a financial institution, consume some of that data and give an option on what actually would it cost for you to use or buy that specific thing. And having that kind of contextual awareness of everything around you, also from a financial dimension, of course, is going to be massive. This, of course, requires extremely fast connectivity, 5G, very good processing power, again, which is becoming more commonplace as we have more CPU power on the edges. And then, of course, the data processing capability at the bank for us to be able to produce those insights in real time. So yeah, a lot of work to be done, but an exciting area. And again, the very definition of embedded finance.
Yeah.
I really like thinking about how this turns into something. You know, we talked earlier about renewing the lease on the Audi, and to go in and literally have an augmented reality app managed by your bank as your financial concierge, that when you use it and you put it in front of the Audi in the dealer, it will give you the lifetime cost of managing the car, what deals are available, and what the alternatives are there and then for you to make a decision. Do you then go and talk to BMW or Mercedes instead? That would be powerful.
Yeah. I'm wondering, Chris, is there any skunkworks developments happening in Backbase looking at this future of augmented reality?
Interestingly enough, if I look at it, Paul, now that we're moving towards saying, continuous engagement, continuous experience is the new game, then the partners that fulfill our partner community are the ones taking it to the art of the possible. They're now thinking, how do we get somebody in the morning, talk to them about what we could do for them, build the app in the afternoon, and give them a view of the MVP by the evening. Yeah. So we're almost not needing to. We've almost put the Lego bricks in place, showed them how they could be put together. And then somebody else is coming up with the view of what does the Millennium Falcon versus the Princess Castle look like, and everything else in between. So our only limitation is the art of the possible and having the imagination to think about what does this look like, create an MVP, throw it out there, test it, get feedback on how it's perceived or how it's valued, and then get it and launch it. Because I think the first person who starts doing this will start getting these digital savvy people getting super interested in this as a platform play.
Yeah, absolutely. Sounds like a dream job for us, Ville.
Yeah.
And we can do it from Amsterdam.
Do it from anywhere. Yes.
Exactly.
Like, in fact, Ville and I were talking the other day about, having nice houses out in the middle of nowhere where they are cheap, but fantastic big houses that cost half of what we're having to pay for them here in the middle of Helsinki. So sounds like an interesting future.
Yeah.
Exactly.
Plus, I've played with Lego since I was a kid, so it's a native ground for me.
And I have kids that are still playing with Lego, so I've got every excuse under the sun for this. But hey, Chris, actually, we have a tradition on this podcast where we always have to have we call it a good but bad joke. And for this season, we decided to give the honor over to our fantastic guests. So I'm putting you on the spot. You don't happen to have a banking joke for us, do you?
I have plenty which I shouldn't say, but I do have one which I can say.
Okay.
So let me build this and think of. I'm not going to get this right.
Okay.
So there's a guy, and he walks into a bank in London just before he's going away on holiday, and he asks for a £5,000 loan. Now the banker asks, "Okay, sir, but can we use anything as collateral for this loan?" And he says, "Yeah, of course. I've got a brand new Bentley Continental just outside." And the banker said, "A £200,000 Bentley?" He's like, "Really?" So yeah, definitely. So he hands over the keys, and the banker and the loan officer start sort of laughing between themselves. They check his credentials and they make sure that he's a registered owner for the Bentley and everything checks out. So they go and park it in their underground garage for 2 weeks. When he comes back, he pays off the £5,000 loan and the interest, which was £14.50. And the loan officer says, "Sir, look, we appreciate your business, but I've got one question, because we looked you up and found out that you are a multimillionaire. So why would you possibly want to borrow £5,000? And he says, "Where else in London can I park my car for 2 weeks and only pay £14.50 and expect it to be there when I return?" So it's a good but a bad one.
That's a fantastic one. And now I'm wondering, how many people are going to start applying for loans now with banks in London? There's going to be an influx of people wanting to have loans for 2 weeks.
That's our new side hustle.
I like it. That's really good.
Fantastic.
Okay. Yes, Ville?
No, fantastic joke. Again, we usually don't get that good jokes in the podcast, so good to have one of these for a change.
Yes, thank you. But anyway, guys, we are heading towards the end of another fantastic episode. It's been a really, really good discussion. I think banking is on the cusp of some fantastic foundational changes, and I'm really excited to be working in this industry. I'm sure you guys are as well. But
yeah, I agree. And just to add, part of being in the organization I am now is we're getting to this world where people are thinking about art of the possible, continuous engagement, continuous experience is that new game. And now we're starting to see that transformation in banking, which is actually going beyond banking. Now that's an exciting place where suddenly people see immense value in their bank, which is something they need to start doing.
Absolutely. Yes, absolutely. But before we close off today, Chris, we would like to give you the chance to let our listeners know how they can find you, get in contact with you, if they want to discuss this with you in more detail or find out more about Backbase.
Yeah, for sure. Feel free to reach out to me. As you can tell by today, I love to talk to people. You can either get me at Chris V at backbase.com or come and find me as Chris Vick 01 on LinkedIn. Always happy to have conversations, especially about how could we do this? What could it look like? How do we build it into programs through partnerships? How do we bring fintechs into this game and get them ready to be working with some of our large global consulting services and advisory partners? So please feel free, reach out to me anytime you want. I'd like to have conversations. And
if you want to talk about downhill mountain biking, then Chris is definitely going to want to talk about that.
Building houses, various things.
Absolutely. Yes.
I have lots of conversations about lots of things.
Fantastic. Thank you very much again, Chris. It's been a fantastically interesting discussion. I've again learned new things that I will take with me going forwards. And to our fantastic listeners, thank you for sticking with us yet again. Thank you for following us, coming with new suggestions on subjects we should cover, guests we should have on the show. As always, please find us on your favorite channel. And most importantly, hit that subscribe button, hit the like button, and leave us a comment. Let us know what you're thinking, because the algorithms on these channels absolutely love it when you're making a comment, and it helps us, right? So help us to bring new, fresh contents to you. And another great thank you to everybody. We reached a milestone on YouTube this week. We have now managed to get our own unique URL on YouTube. Thank you to all of you who have hit the like button and got us above that limit. So that's fantastic. We are really excited about that. So thank you very much. Keep hitting that button and the subscribe button and all the buttons you can find, and leave us the comments. We will be back, Ville and I, in 2 weeks' time with another fantastic guest. And I promise you, it is a fantastic guest. Until then, this has been Fintech Daydreaming.
This is Fintech Daydreaming.